Hello students and welcome to the lecture. So students, as we know that in the previous lecture we had completed the financial knowledge and the banking awareness part of it. Okay, so basically from now we are going to start a new series which we called as a financial system. Okay, in financial systems there are so many topics on which we are going to discuss. Okay, like first we will start with the Indian banking system. Okay, so far in the financial knowledge, basically we had completed the several topics like we had discussed on the banking history. Okay, thereafter we had discussed the banking evolution. All right, and we had discussed the types of banks in India. Okay, these are the main topics which we discussed in the previous financial knowledge series. Also we had discussed the organizations like the PFRDA, all right, like ERDAI, got it, like SEBI, SIDBI and all. Okay, and in the last lecture we had done with the IBBI, got it. So that was the financial knowledge. In the banking system of the financial system, you can say what we are going to study, basically we will continue with these topics which we had already discussed in the previous lecture, but the reason behind studying them again is that now we will try to connect the picture with the real time scenario. Okay, in the previous you can say series, basically what we were doing, we were trying to connect the thing at that point. Like if I was telling you about the Bank of Hindustan, for example, Bank of Hindustan, then Bank of Hindustan, when I was telling you about it, basically I'm telling you about its impact on that time only, when it was used to be in existence. What was the Bank of Hindustan? Okay, but now in this series, in the financial system, we will try to connect the relevancy of the Bank of Hindustan into the modern times. Okay, like how do we connect the Bank of Hindustan and the other banks, and they are working with the modern times. So basically you can say that in this particular series we are going to trying to connect the past with present with future. Okay, starting with the past, going with the present, concluding it for the future. This is the scenario, the picture which we are going to, you can say, generate or make in this particular series. Got it? I hope now you got a mental idea that what we are going to discuss in the Indian banking system. Okay, so let's see the index. In index, there are only three things, or you can say these are the broad headings. Okay, like whatsoever the topics we are going to discuss, basically we are going to discuss them in the division of these three main headings, like the generations of the banking. Okay, like the banking sector developments 2014 onwards, like the risk in banking. Okay, these are the main broad headings which we are going to discuss, and inside these headings there are so many you can say topics which we have to study and which we have to discuss in between. Okay, so let's first start with the generations of the banking. Okay, basically here generations is signifies the time period and development of the banking system during that time. Okay, like time period and the development of the banking during this time is basically signified by the generations. And when we talk about the generations, there are basically four generations. How many generations are there? Four generations are there in which we have divided the particular topics. Okay, so let's first begin with the first generation. So if we talk about the generation of the banking and the first generation banking, so basically it is for the pre-independence India background. Okay, pre-independence India background. Now here is one thing which is very, very important. Okay, as I have told you, there are total one generation, second generation, third generation, fourth generation. Okay, first generation, got it. Second generation, got it. Third generation, got it. Fourth generation, got it. There are basically four generation, but remember, there is one thing which I would like to tell you before starting of this particular series, that all of these generations having the proper timelines, or you can say timelines are well defined. Timelines are well defined. So these are the generations. Got it? But when we talk about the first generation, then no well defined timeline. Okay, so that's the thing which I would like to tell you. All the three generations having the well defined timelines, but first generation is not. Why? Because if we just look at here, pre-independence India, pre-independence India, all right, it means that modern, medieval, ancient history, whatsoever happened in India covers under this particular area. Okay, and as we know that banking in India was actually started in the ancient times, or you can say the banking activities. Okay, banking activities were actually started during the ancient times. Okay, thereafter they were modified as per the times goes on, like the ancient times, then the ancient time dynasties modified it, then the medieval time supported it, and we know when the Britishers were there in the you can say modern time, they completely changed it. Okay, so that's why there is no particular well defined timeline. Got it? So if we talk about the background, then the period before independence, like we were got independence in the 1947, it means that if we're talking about the pre-independence India, so basically we are talking about before the 1947 scenario. Okay, in India was marked by the Swadeshi movement, a nationalist movement aimed at promoting Indian goods industries and reducing dependence on the British products. As a part of this movement, many small local banks were established to cater to the financial needs of the various regions in India. Okay, like to understand this particular, you can say para, basically we have to create a picture on ground. Okay, like if we talk about the Bank of Hindustan. Okay, thereafter if we talk about the Bank of Bengal. Okay, Bank of Madras. All right, thereafter Bank of Bombay. All right, also you can say the Oriental Bank. Okay, and other banks also. all of these banks were either established or funded by Britishers, or you can say Europeans. Okay, none of these banks were actually established by the Indians except the Punjab Bank. Okay, which is right now known as the Punjab National Bank, which was established at Lahore during which century? During the 19th century. Got it? So all of these banks which were operating in India, they were either established by the British government or funded by the British government or the Europeans. None of them were basically established by the Indians except the Punjab Bank, which was established in the Lahore during the 19th century, sorry. Okay, so what happened? That the entire banking system of India were controlling by the outsiders or the Britishers. Okay, there was no participation of Indians during the in the maintenance of the Indian banking system. Okay, but thereafter there was a year which is called as a 1905. In 1905 something was happened. What happened? There was a viceroy whose name was Lord Curzon. Okay, what he did, suppose it is the Bengal region. Okay, he divided the Bengal into two areas, Muslim majority and the Hindu majority. Okay, the Muslim majority is the area of West Bengal. Muslim majority is the area of East Bengal. Okay, however, the Lord Curzon and the British government claimed that the region of Bengal was too large, so it was difficult to administer the area. That's why they divided it so that they could manage it effectively. But what happens? Basically, this was done to divide the Hindu-Muslim unity. In response of this, we launched the Swadeshi movement. Okay. Which movement we launched? We launched the Swadeshi movement in order to promote the Indian services, the Indian goods, the Indian, you can say, participation in the economy and all. Okay. And when we were talking about the India or the Indians, similar thing was happened in the banking sector also. Okay, like the banking sector was not remain untouched by the spirit of reducing the dependency on the Britishers, Europeans or the outsiders and to promote the Indian participation. That's why we can say as a part of this movement, which movement? The Swadeshi movement. Many small local banks were established to cater to the financial needs of the various regions in India. Okay, however, we were not capable to establish the banks, large banks in comparison with the banks established by the Europeans or by the Britishers. Okay, but we managed to establish the small and the local banks so that we could cater the needs, financial needs of the various regions in India. Got it? Now I hope that you have got the idea why the Swadeshi movement was launched. Alright, why the picture was that the Indians were not participating in the banking economy. All of the banks were established and funded by the Europeans and the outsiders. Got it? Thereafter, if we talk about the establishment, so in the establishment, we could say basically we established the small and the local banks. Why? because we were not so capable to establish the well-funded large banks in competition with the Britishers. Why? There are two main reasons. First is the capital support and management. Okay, the Indians who were establishing these banks were not equipped with the proper facilities so that they could support the large banks, and even they were not well trained in the management of it. Okay, that was the first reason. Second was British government policies. Okay, the Britishers were trying to get the control over the Indian market. So if the Indians were trying to get into the participation of the banking economy, what do you think? Would they allow? Never. They would never allow. Got it? What they will do? They will crush the rise of Indian banks. Okay, but the Indian banks were not in, you can say, capacity to compete with the British banks, or you can say to pose the challenges to the outsiders banks and the European banks. Okay, that's why we were remain small and the locals, and generally we were not facing that competition from the British government that we expected. However, they tried to knock us down, but not in that manner. So these banks, known as the first generation banks, were often founded by the local leaders, businessmen and the communities. They were seen as a way to promote the economic independency and self-sufficiency at the grassroots level. Okay, so as we know, after the Swadeshi movement, in the spirit of, you can say, Atmanirbhar or the self-reliance, which we were practicing on that time, what happened? The small and the local banks were born, and these banks were generally founded by the local leaders, businessmen and the communities. Okay, so now you can see that all of them are the local people, or you can say not so rich people. Okay, but these banks were established to promote the economic independency and the self-sufficiency at the grassroots level, so that we could bypass the monopoly of the Britishers and the Europeans on the Indian banking economy. Okay, thereafter, now this is a time that we should understand the challenges faced by them. Okay, like, let me tell you one thing in a straightforward manner. Most of the banks which were established during that time were either shut down or get merged or acquired by the large banks. Okay, so remember these details. Many banks which were established or founded during that time periods were either shut down or get merged, or you can say acquired by the large banks, because they were inefficient in functioning as per the required standards. Okay, these banks were not in accordance with the required standards. That's why they were inefficient. So now we know that most of these banks were shut down, getting merged and whatsoever. So what are the challenges they faced? Why they couldn't survive? What happened to them? These are the main areas. So first, you can say, is the internal frauds. Let's see. One of the primary challenges faced by these banks were internal frauds. Bank officials or employees engage in dishonest practices such as embezzlement or the misappropriation of funds, leading to the financial losses and the instability. Like you could say, when we talk about the Britishers, or you can say Europeans, when we talk about them, what happened? Basically, these are the well equipped and well managed banks. Okay, so when we talk about these people, these are the well equipped and the well managed banks. Okay, but when we talk about the Indian banks or the local banks, basically these banks are poorly equipped and poorly managed. Okay, because we do not have the training, we do not have the experience, we do not have the organization as the Britishers and the European side. Because whatsoever we established, whatsoever we started just by the idea, just by the feeling of being self-reliant. We were emotional, not practical. Marks my words, we were emotional, not practical in approach. Okay, because of this, first of all, we face the internal frauds. We do not have a proper guidelines, we do not have a proper rules and regulations, we do not have a proper, you can say, checkout to check whether things were being done in an accordance with the required standards or not. Because of this, what happened? Either the officials or the employees got dishonest and leads to the embezzlement or the misappropriation of the funds, which leads to the losses, financial losses and the instability. Okay, so this is the first area. Interconnected lending. Another issue was interconnected lending, where banks would lend to each other or to related businesses. These practices create a web of financial relationship that increase the risk of financial stability. Now you can say, for example, let me make you the picture. This one, this one, this one, this one, this one. A, B, C, D, E. Okay, these are the you can say five banks and the business. B required money, A lended to him. Okay, then A also lended money to him. Okay, C lended money to E, D lended money to C, C also lended to B, B lended to E. Okay, E lended to A again lended to B. All right, then B also lended to D, C lended to D, D lended to A. Now you can see this is the diagram of interconnected lending. Okay, if we talk about today's scenario, then today's what happened? Today's basically, if there are banks, okay, then there is RBI. If the banks required the funding, they directly reach the RBI. Okay, thereafter the RBI will provide it to the bank. This is the clear channel and one channel. But during that time, what was happening? If the businesses, and you can say if the companies and organizations required the funding, what they were doing? They were arranging the funds from each other. Thereafter you can see as it is. Okay, now if you just look at this picture, what do you think? Are you able to create any valuable conclusion, like who has lended the money to whom? No. So the first is, this picture is vague picture was created. This is the first observation we had made. Okay. Second thing is the risk associated. Why? If we talk about this picture, anything happens to the bank, the RBI will bear the charges, but nothing will happen to the bank 2. Why? Because bank 2 is not connected with the bank 1. Okay, it means that operations of bank 1 is different from the bank 2. Got it? But if we look at this picture, what we are seeing all of these banks are being integrated to each other. Anything happen to the bank, maybe the E will be the victim, D will be the victim, A will be the victim. Similarly, if anything happens to any of them, all of them will suffer. Okay, so this leads to the web of the financial relationship that increase the risk of financial instability, because if anything happens to any of them, all of them got you can say suffered or stuck. Okay, thereafter, amalgamation of the trading and the banking activities. Many of these banks engage in the amalgamation of trading and the banking activities. These mean that they were involved in both financial transactions and the commercial activities, blurring the lines between their banking functions and the trading operations. Now, if we talk about the today's scenario, because in the starting of this lecture, what I told you, I told that we were trying to connect the past with the present, then leads to the future. Okay, so if we go by the words which we had just made in the beginning of this particular lecture, what we could say if we talk about the present scenario, then in present scenario there are many type of you can say organizations, like the you can say banking. Okay, in banking there are commercial banks, okay, corporate banks or industrial banks you can say also. Thereafter we have the developmental financial institution. Okay, we have the dedicated financial institution. All right, we had the trade finance corporations. Okay, now if we look at the present picture, what we will see, we have the clear-cut division of the financial and the banking services. Okay, these are working today for the better future or the tomorrow. Okay, but during that time, what happened, all of these banks did not get any you can say distinction between financing of these all areas. What they are trying to you can say get entered in every place. Okay, like you can say if this is the bank A, he will be trying to enter this area, this area, this area, this area, this area, this area, and whatsoever area, 360-degree area they are trying to cover. And what it bring to them, it bring the instability. Already they are small in number, they having the limited resources, and when they try to participate a lot, what they see the blurring in the lines between their banking functions and the trading operations, which eventually led them to get collapsed. Okay, if we talk about the consequences, what happened to them, then you can say these challenges, including the internal frauds, interconnected lending, and the amalgamation of trading and the banking activities, ultimately lead to the failure of many first generation banks, which could not survive the areas. The lack of transparency, accountability, and separation between the banking and the trading activities weakened the financial health of these banks. Okay, and contributed to their downfall. So if we talk about the first generation banking pre-independence India, conclusion, after seeing all the facts, so in conclusion we can say the first generation banks established during the pre-independence period in India faced the significant challenges that impeded their success. Why the challenges were there? Poorly equipped and the poorly managed. Second, they crossed the lines between the banking institution and the trading corporations. Okay, despite their noble intentions to promote the economic independence, factors such as internal frauds, integrated lending, and the amalgamation of trading and banking activities undermined their stability and viability. Okay, because they had the vision, but they do not have a strategy and planning on ground. Okay, so students, basically in this lecture we had done with the first generation banking. In the next lecture we will continue with the remaining bankings generation. Till then, just revise all the facts and figures we had discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture, and what we say thank you.